Welcome to the Alger podcast. Following the podcast, there will be a brief disclosure.
Hello, I'm Alex Bernstein, and you're listening to the Alger podcast, Investing in Growth and Change. As many investors know, artificial intelligence has been a prominent theme across Alger strategies for some time now, impacting a wide range of sectors. Now, Alger has launched a wholly dedicated strategy called Alger AI Enablers and Adopters, which is available as both a mutual fund and an ETF. This new strategy is managed by portfolio manager Patrick Kelly, who's had a relentless focus on AI in his portfolios for more than a decade. Here to talk about his new strategy is Patrick Kelly. Patrick, thanks so much for joining me this afternoon.
Thanks, Alex.
Patrick, you and I have been talking about AI, robotics, machine learning, and similar technologies for at least 10 or 15 years now. What makes you so excited about AI today?
Well, AI is not a new technology. It's been evolving and emerging over the years. And then we hit this inflection point in November of 22 with the launch of ChatGPT. And this idea of generative AI was introduced. This marked a significant acceleration in the innovation behind AI and democratized it as well. So now there's all these large language models that are being developed by companies such as OpenAI. You have the cloud vendors and the chip companies that are all helping to democratize AI as well. That's enabling the masses to leverage AI technology, which we believe will accelerate the innovation and the adoption of AI. It was probably 10 years ago where the CEO of Google said that he believed that AI would have a more profound impact on society than fire or electricity, which was a pretty bold statement, but it was difficult to fully appreciate at that time. I think there's a better appreciation for that view now as the technology is evolving and the innovation is accelerating. Jamie Dimon, in his recent shareholder letter, said, "While we do not know the full effect or the precise rate at which AI will change our business or how it will affect society at large, we are completely convinced the consequences will be extraordinary and possibly as transformational as some of the major technological inventions of the past several hundred years. Think the printing press, the steam engine, electricity, computing, and the internet, among others."
And you think there's a pretty significant TAM here too, total addressable market.
Yes, AI represents a massive TAM. From a big picture perspective, the idea behind AI is that it enables hardware and software to potentially replace or significantly enhance the productivity of humans. Global labor is roughly a $30 to $40 trillion market. So if you can replace or significantly enhance the productivity of labor, that's a massive TAM. And even if a fraction of that 30 to 40 trillion is addressable, it's still a significant TAM. In addition to that, we believe that AI will also be a significant revenue generator to many companies, which is further additive to that TAM. We also believe every country will have its own AI cloud because it can be a matter of national security and national sovereignty, and this spend is not tied to a P&L. The size of this potential market is an important point to understand and is one of the primary reasons that we are so excited about the investment opportunities around AI.
And that's the main idea behind the strategy.
Yes, we believe AI will create winners and losers across sectors, and that those companies that are well positioned to benefit and leverage AI could outperform the market over the long term.
Patrick, the name of this strategy is the AI Enablers and Adopters strategy. What does that mean, enablers and adopters?
Enablers are the companies that are enabling other companies to take advantage of the AI, and the adopters are the companies that are adopting the AI from companies like Microsoft, NVIDIA, OpenAI, or these large language models. They're adopting it within their enterprises to significantly enhance the revenue and or the efficiency of their business. We think because this technology is going to be so pervasive across sectors, there are a lot of different companies that are going to be able to take advantage and leverage AI technology.
Patrick, I wanted to talk about a couple examples of technologies that you believe may be enhanced by AI.
It's difficult to list all the areas where AI is having an impact, but some of the main use cases where we are currently seeing an impact are software coding, marketing, fraud detection, digital advertising, call center customer service, creative arts and design. We think the AI use cases will continue to expand as generative AI is applied to emerging technologies. One big area of focus and opportunity longer term is autonomous driving and autonomous robotics or humanoids. We think autonomy can create massive long-term value to companies and the global economy. The timing of these major advances is uncertain, but we think generative AI is accelerating the timing of these emerging technologies.
And is this related to AGI, artificial general intelligence?
Yes, AGI basically means that you're mimicking human behavior, or you're reaching human cognitive abilities, or you're able to perform tasks that humans would typically do. So when we achieve AGI, there will be a lot of implications behind that. And again, I think that's why this represents such a large TAM and how AI can address some portion of the global labor TAM.
Patrick, you've been tracking AI companies for years, and now you have a portfolio dedicated to AI. What makes a company not just a great company, but a great AI company for this portfolio? That is, what checks all the boxes for you?
Sure. It would be a company where AI can enable that company to sustain or enhance their revenue growth rate. And ideally, it's enhancing their competitive position and their competitive mode as well. A company such as Microsoft seems to check all the boxes. Evercore ISI recently put out a piece on Microsoft. They estimated that generative AI can lead to an additional $80 billion of revenue in 2028 for Microsoft. We actually think that number could be conservative. Microsoft is infusing AI across all their applications. They're embedding AI across their entire product line. And this is not only leading to an acceleration in their top line growth, but it's also significantly enhancing their competitive position and their competitive moat. And now Microsoft is launching an Office Copilot where they basically want you to start and end your day with your digital assistant, which we believe should significantly enhance your productivity as an employee. As a result, it further entrenches enterprises with Microsoft and their family of products.
And beyond the more well-known names, you're also focused on AI companies that could be tomorrow's leaders.
Yes, absolutely. We think there are a number of companies that will benefit from AI that are not fully appreciated by the market. There will also be a number of emerging companies over the next decade that have the potential to disrupt the incumbents. And some of these companies, we may not really know who they are right now, but we believe there's a lot of funding going on in this area. Many of these companies will fail, but many others will be successful.
Patrick, in considering a strategy like this, some investors will no doubt be asking, why active management? Why do you think active management of a product like this is so important?
Given the unprecedented pace of innovation, we want to have the ability to adjust our positions and weightings according to the rapidly evolving landscape. A perceived winner today may not necessarily be a winner tomorrow if they do not continue to adapt and innovate. And because all this innovation is occurring at such a rapid rate, it does present risks to even some of the most dominant companies in the market. We also expect volatility to be high in a number of the AI beneficiaries, and we want to be in a position to take advantage of that volatility.
Patrick, final question. For an investor who may be considering an AI product for the very first time, why Alger?
Why Alger? We believe the mega theme of artificial intelligence is perfectly tailored to our investment philosophy. Our investment philosophy revolves around investing in positive dynamic change, identifying companies in the midst of positive dynamic change, and seeking to capitalize on that change before it is recognized by the rest of the market. AI is one of the biggest technological changes in history, and this will be a multi-decade theme. At Alger, we are a very fundamentally driven, experienced investment team. We're very focused on this topic of AI and thinking through how it's going to impact the economy, the market, sectors, and companies. We believe we are well suited to identify the potential winners and the losers as a result of this technological revolution.
Patrick, thanks so much for talking with me this afternoon.
Thanks, Alex. Great talking with you.
And thank you for listening. For more information on the Alger AI Enablers and Adopters strategy, and for more information on how Alger can help you unlock your growth potential, please visit alger.com.
The views expressed are the views of Fred Alger Management, LLC, FM, and its affiliates as of May 2024. These views are subject to change at any time and may not represent the views of all portfolio management teams. These views should not be interpreted as a guarantee of the future performance of the markets, any security, or any funds managed by FAM. These views are not meant to provide investment advice and should not be considered a recommendation to purchase or sell securities. Holdings and sector allocations are subject to change. Risk disclosures. Investing in the stock market involves risks, including the potential loss of principal. Growth stocks may be more volatile than other stocks as their prices tend to be higher in relation to their company's earnings and may be more sensitive to market, political, and economic developments. Local, regional, or global events such as environmental or natural disasters, war, terrorism, pandemics, outbreaks of infectious diseases, and similar public health threats, recessions, or other events could have a significant impact on investments. A significant portion of assets may be invested in securities of companies in related sectors or industries and may be similarly affected by economic, political, or market events and conditions and may be more vulnerable to unfavorable sector or industry developments. Investing in innovation is not without risk, and there is no guarantee that investments in research and development will result in a company gaining market share or achieving enhanced revenue. Also, developing technologies to displace older technologies or create new markets may not in fact do so, and there may be sector-specific risks as well. As is the case with any industry, there will be winners and losers that emerge, and investors therefore need to conduct a significant amount of due diligence on individual companies to assess these risks and opportunities. Companies involved in or exposed to AI-related businesses may have limited product lines, markets, financial resources, or personnel as they face intense competition and potentially rapid product obsolescence. These companies may be substantially exposed to the market and business risks of other industries or sectors and may be adversely affected by negative developments impacting those companies, industries, or sectors, as well as by loss or impairment of intellectual property rights or misappropriation of their technology. Companies that utilize AI could face reputational harm, competitive harm, and legal liability and/or adverse effects on business operations as content analysis or recommendations that AI applications produce may be deficient, inaccurate, biased, misleading, or incomplete, may lead to errors, and may be used in negligent or criminal ways. Companies exploring new technologies may face regulatory, political, or legal challenges that may adversely impact their competitive positioning and financial prospects. Past performance is not indicative of future performance.
Important information for U.S. investors. This material must be accompanied by the most recent fund fact sheets if used in connection with the sale of mutual fund and ETF shares. Fred Alger & Company, LLC serves as distributor of the Alger mutual funds.
Important information for UK and EU investors. This material is directed at investment professionals and qualified investors as defined by MIFID FCA regulations. It is for information purposes only and has been prepared and is made available for the benefit of investors. This material does not constitute an offer or solicitation to any person in any jurisdiction in which it is not authorized or permitted, or to anyone who would be an unlawful recipient, and is only intended for use by original recipients and addressees.
The original recipient is solely responsible for any actions in further distributing this material and should be satisfied in doing so that there is no breach of local legislation or regulation. Certain products may be subject to restrictions with regard to certain persons or in certain countries under national regulations applicable to such persons or countries. Alger Management Limited, Company House number 8634056, domiciled at 85 Gresham Street, Suite 308, London, EC2V 7NQ UK, is authorized and regulated by the Financial Conduct Authority for the distribution of regulated financial products and services. FAM and/or Weatherby Capital LLC, U.S. registered investment advisors, serve as sub-portfolio managers to financial products distributed by Alger Management Limited, Alger Group Holdings LLC, parent company of FAM, and Alger Management Limited. FAM and Fred Alger & Company LLC are not an authorized person for the purposes of the Financial Services and Markets Act 2000 of the United Kingdom, FSMA, and this material has not been approved by an authorized person for the purposes of Section 21(2)(b) of the FSMA. Important information for investors in Israel. This material is provided in Israel only to investors of the type listed in the first schedule of the Securities Law 1968, the Securities Law, and the Regulation of Investment Advice, Investment Marketing, and Investment Portfolio Management Law 1995. The fund units will not be sold to investors who are not of the type listed in the first schedule of the Securities Law.
The following represents the noted percentages of firm-wide assets under management as of February 29, 2024. Alphabet Inc. 2.29%, Microsoft Corporation 9.75%, NVIDIA Corp. 6.43%, OpenAI Inc. 0%. Total addressable market TAM is the maximum revenue potential for product or service if it were to capture 100% of the market. It's also known as total available market. Profit and loss P&L is a financial report that shows how much money a business has earned and spent over a specific time period. It also shows whether the business has made a profit or loss during that time. P&L statements are also known as income statements. Evercore Inc. is an independent investment banking advisory company. Evercore ISI's research department presents clients with company-specific and cross-industry views rooted in our deep understanding of the macro landscape. Fred Alger & Company, LLC, 100 Pearl Street, New York, New York, 10004, 800-223-3810, alger.com.